Well, thank you so much for having me again. I'm excited to talk about this today.
And we're going to talk about alternative methods of down payment assistance. Yes.
There went part of it in my lap.
Okay, so page is back.
All right. So talking about alternative sources of down payment, some sources of assets, which could be stocks, could be savings, could be proceeds from a life insurance policy, could be a trust fund. Many assets could be, depending on how they're used in the transaction, they could be sources of down payment. They could also be sources of income. And how they're being used in the transaction is going to be determined how they're categorized. So just to give you guys a little bit of background and just some basic mortgage knowledge, when a client is getting a mortgage, there's 4 areas that get taken into consideration. Assets, which is part of what we're going to be talking about today, income, credit, which would be another fantastic Wednesday morning topic. Bonnie and I were talking about that earlier this week. And then collateral, the actual property itself. So you can have somebody that qualifies on income, assets, and credit, but the property itself does not qualify. We've kind of touched on that, or at least one aspect of that qualifying through our appraisal gap strategy, but there's other reasons why a property may not qualify. But today we're going to talk specifically about assets and potentially how they kind of cross that line into income.
Well, I'm interested in say you have an annuity or something that you're getting, or you have the 401k, like a lot of people have these criminalized 401k. You know, there's 2-3 things you can do with a 401k without penalty, right? You roll it into an annuity, like what's called an IUL or something, universal life policy, or you can buy real estate. But what I was most interested in doing and was thinking about was, if I'm sitting with $300,000 in my house, right, and equity in my house or whatever, and I wanted to take that money and give it to my kid when he buys a house. I mean, he's not my kid, but hypothetical speaking for somebody, the money's not making anything in the stock market right now, right? So why wouldn't somebody do that and help their kid get a house and then maybe split proceeds or get a loan back or something?
So let's talk about, well, one, I'm not a tax professional, so I won't be giving you any tax advice. I don't give clients tax advice. So that's a terrific opportunity to build your referral sources, and having a good financial professional, and that could be somebody that's more oriented towards investment. It could also be having a great life insurance professional, and that's somebody and they're going to be 2 different people. And talking about the IUL, Daniel, I'm a huge fan of that, but I'm also a huge fan of stock investing as well. And again, some of these things can be used as sources of down payment. They could be reserves. They could also be income. So let's just kind of dive in here. So first of all, how is it going to be used in the transaction? Well, back up. So you got to have a down payment. The things you've got to have in a transaction, you're going to have a down payment unless you're going with a VA loan or USDA loan that does not require a down payment. But for the most part, you got to have a down payment, closing costs, prepaids and or escrows, and possibly reserves. So what can be used for that? It depends. And a lot of it depends on, how do we document this? Is it from an acceptable source or not? And that's part of the due diligence that we are doing. Part of the reason we're asking for all of the documentation from borrowers, where the can of worms opens up.
Everyone, thanks for coming outside with me today. Today, we're opening up a can of worms. Oh, that tastes terrible. It's like the gall and bitterness of an angry archer mixed with the sweat of a keyboard warrior. It's delicious.
And a lot of times the initial conversation I have with folks, I'm asking these questions. What do you do for a living? Where's your down payment coming from? Where is that money right now? Had this conversation yesterday with somebody, and it's like there's red flags when he starts telling me where his money's coming from. And assets and income are tied together. And I've got somebody that has not filed his taxes for the last 6 years, but he's got a source of income. He's self-employed. So he's got this cash coming into his account that he's planning on using as his down payment and his cash to close. I'll call down payment and lump everything together. But now we got to source those funds. So what's an acceptable source of funds? Just about every transaction that y'all write has got earnest money, correct? So earnest money has to be from an acceptable source. It's got to be verified, and it's got to be verified that it was in your account or coming from an acceptable source. If we can't verify it, document it, can't use it, it's got to be backed out of the transaction as far as assets go. So
no mattress money?
Well, mattress money is on the list, so we'll get to. So
how can you verify that?
Well, we'll talk about it. All right. So let's kind of go through some of the things that are obvious. Checking and savings. That's the first place we go with a client. What's in your checking and savings account? Sometimes just because it's already sitting in your checking and savings, we've got to see those accounts. And a lot of buyers, it's kind of this running joke within the mortgage industries. We always ask for all pages of your bank statement, even if they're blank. And what do you get from the borrower? You get a snapshot from their bank's phone app, and it just shows the balance in their account. That is not what we need. We cannot use it. We need to see every single deposit, and we've got to see where that money's coming from. Are the deposits coming from your employer? If you've got cash deposits, a lot of it has to do with that verification. Are they larger than normal deposits? Where is all of this coming from? So you've got your checking and savings. What about stocks, bonds, mutual funds, 401ks, IRAs, investment accounts? Can they be used as part of the down payment and or income? The answer is, for the most part, yes. And it all comes back to how is it being verified, or how we verify it, depending on what's the asset. How is it being used in the transaction?
Hey, Chris, you think it's safe to drink from a fire hose?
Why not, Dad? It's just water.
All right, well, turn it on. I'm very thirsty. Nice job, Chris. You got my shirt wet.
Does that asset have to be liquidated or not? 401ks in particular can be a little bit challenging, because 401ks, if you've got employment or an employer match that's going into that account. I had this just recently. A lady has sent me her 401k statement. She thought she was going to be able to use 100% of those funds towards her down payment, and she couldn't. We have to get a statement from that account manager that says how much funds are available for withdrawal. What are the terms of withdrawal? Sometimes you can borrow from those funds, depends on how much is in that account.
The markets are in turmoil. Everything is shifting. And if you're not paying attention, you're going to get wiped out. This is about the greatest bubble. And for those of you with a 401k, or hoping for retirement, or planning on playing golf for the rest of your life, you better pay attention. I hope I'm wrong, but I think we're heading for a global depression.
For the purpose of purchasing a home, and that's actually something that's determined by the type of investment. You have to go to the manager of that account to get those particulars. But as far as how can they be used for a mortgage and the purpose, and the reason I'm saying purpose is I had a client that before they talked to me, this was a very well-qualified borrower, great credit, fantastic assets. They had cash on hand. They had a lot of cash. The type of business that they did, they received cash for the services that they provided. And they had been very diligent with adding to 401ks and IRAs. They assumed that they had to have 20% equity or 20% down payment for this home that they were purchasing. So before they talked to me, probably a month and a half, 2 months before they talked to me, they liquidated their 401k. Totally closed out the account. Paid $20,000 in penalties for doing that.
Not only that, they have to put it as ordinary income. So now they're going to pay 26% on top of it as well. Why in the world? Why would they do that?
Because they thought they needed it. They assumed they needed those funds. They didn't need the funds, as it turned out, but now they had already liquidated the account, deposited the money in their account. It had not been 2 months. That was 2 months is key. It had not been deposited in their account for 2 months. So all of a sudden they've got this $80,000 deposit that goes into that checking account. And we're like, well, where'd that come from? So now all of a sudden we have to document that income for that large deposit. We've got to document. And so this is one of the reasons why it is so important to have your buyer clients talk to a lender, even if it's months ahead of them thinking that they want to buy a house. And this is part of that planning process and making sure that their down payment is coming from an acceptable source. And how does it need to be, how much do they need? And how does it need to be documented? Had these folks talked to me 2 months prior to thinking that they were ready to buy a house. Actually, I talked to them after they'd already found a property, which was even worse. So we were scrambling. So we could have saved them so much money.
Isn't it a 20% penalty when you take out your 401k unless you roll it into the real estate or another account? Like another
I don't know. I don't know exactly what that penalty is exactly.
It's heavy.
That's a great question for a CPA. So if somebody's got funds for a 401, funds from some sort of investment asset, if they're using it for reserves, we just need a bank statement. It doesn't have to be liquidated. And I had a first-time home buyer client that here in North Carolina, they were doing a USDA loan with a down payment assistance program, and she needed to have 2 months of reserves. So 2 months of whatever her house payment was going to be. She did not have that in her checking account. And so we're going, do you have a 401k that you've got money in? She had just started contributing to a 401k, didn't have a huge balance in it. And she's like, oh, but I don't really want to use that money. I don't want to have to take that money out. I've just started putting money in. We didn't have to take it out. She just had to provide us with a statement that showed that she had the money sitting in there, and we were able to use that for her reserves. So the reason that you're using this money is going to be different as far as how does it get documented in the transaction. Somebody may use a 401k, like if I've got some retired clients that now they are using their asset depletion from their IRA, 401k, and other investments. That's the money they live on. We document that totally different. And it counts as income, not assets. The vehicle's the same, but it counts differently in the transaction. For retired clients, it could be both. Let's talk about some other kind of interesting and not so thought of down payment sources. Daniel, you kind of touched on it. Cash value life insurance. Anybody that has got a whole life policy or an IUL that's got some cash value to it, you can borrow against that cash. So you don't even have to, so many people I talk to think that they have to liquidate these sources of investments, and you don't necessarily. So it may be that you can borrow against it. Cash value life insurance is a fantastic source of kind of alternative down payments. One that we're seeing right now, more and more, is cryptocurrency. We've got so many people that have gotten into cryptocurrency, and I've seen this evolution in a very, very short period of time where it was not an acceptable source to now it is. And it depends on how everything comes down to documentation. So cryptocurrency can be used if the ownership of that cryptocurrency can be documented. It's got to be documented for minimum of 60 days. That does have to be liquidated. And so it's how those funds get documented. The sale of other real estate, whether it is net proceeds from an existing home or perhaps a second home or other assets. Talked to somebody yesterday that we're going over this, where's your down payment coming from? And he's like, well, I've got some assets that I can sell. Okay, tell me about those assets. What exactly, are you talking about? He had lawnmower equipment. He had firearms. He had stuff, personal stuff that to me, assets are investments, savings, things like that. In his mind, his assets were, belongings that he was going to go sell. I've had people that have sold jewelry. And all of that is fine, but it comes down to documentation. So I was able to go, okay, all those things are fine, but if you go sell them, make sure that you have a bill of sale. If you're depositing cash into an account, particularly if it is coming from the proceeds of a sale of any of your belongings, make sure that there is the paper trail that shows where it came from. You got to show that you had ownership of that. We'll say the lawnmower equipment this guy was going to sell. He had, here in North Carolina, we all have lots of property, and the zero turn lawnmowers are a big deal. Well, they're not cheap. And if you want to go sell it, that's fine. But you got to show that that you owned, you were the owner of that asset, and the sale was documented. So it makes sense with the cash that gets deposited into your account. One of the things that we're seeing on as far as kind of cash deposits, I'll call them a cash deposit, it's really not, Venmo, Cash App, and those types of financial kind of vehicles. Zelly is another one. We're seeing a lot of those more and more where people are selling some sort of goods and services. PayPal is another one where we got, people can earn their income from goods that they're selling, particularly like online sort of services. So again, those could ride the line of being assets or income. Daniel, you talked about if you've got a lot of equity in your house. Could you give that money to son, daughter, family member as a gift for their home purchase? The answer is yes. Gift funds are perfectly acceptable sources of down payment. They can be a source of reserves as well. But it has to come from an acceptable donor, and that transaction has to be documented. You have to show that the donor that gave the funds, one, that it was a gift. It truly was a gift. There is no expectation of repayment. Now, if whoever receives the gift decides they want to repay the donor, that's fine and dandy, but it cannot be a condition of the gift. It can't be a personal loan. So who's an acceptable source? And I like conversation yesterday. I had one very interesting character who was very creative, and we were talking about the source of his down payment. He goes, well, my best friend is very wealthy, and he has said if I need some money to buy this house, he'll give me a loan. No, that is not going to work. That is not one. You can't get an unsecured personal loan for your down payment, and a friend is not necessarily an acceptable gift donor. A close family friend could possibly be an acceptable gift donor. Here's an interesting little twist I just learned. Gift funds have to come, preferably, are going to come from a relative. Did you know a cousin is not considered a relative as far as gift funds are considered? It could come from a close family friend.
Eddie? Meg's been after me like flies on a rib roast. You folks didn't get to meet Dinky last night. He had the shit, so he slept in the barn. Yeah, I bet you could use a cooling, huh?
Now you're talking.
Eddie? Before we left, he drank a half a quart of Pennzoil. Boy, when he lifted his leg the next morning, whoa! Dinner was full!
But it has to be documented. One of my coworkers had to document a close family friend, and they had to provide or had to show that longtime connection, and they had to show like their third grade yearbook where the friend had signed the yearbook, and it's like you'll be my lifelong friend or something, really sappy like that. And that was how they made that connection. So gift funds from an acceptable source or from an acceptable donor, and the funds coming from the donor are an acceptable source, are just fine. Along the same lines of gift funds is a gift of equity. I've got a transaction closing on Thursday, and they're getting a gift of equity. There's one sister is buying a property from another sister, and gifts of equity only work when the transaction is between family members. So with a gift of equity, 100% of the funds for this transaction are coming from this gift of equity. That one's ended up being really interesting. They had been working with another lender prior to coming to me, and the other lender really did not understand what equity was and how it can be used in a transaction for a gift of equity. He had explained it to them as, you sell the house for $200,000 and the property appraises for $225,000. So you're really selling it for slightly below market value. And that gift of equity is that $25,000 over and above the sales price. No. Yeah, that's kind of sort of equity, but it's not the sort of equity that can be used in a transaction.
You can't put it in your pocket.
And it took several conversations with the seller for them to understand that a gift of equity is truly a gift of your net proceeds from this sale.
Yeah, usually gifts of equity come in when it happens. The state divides between three siblings, and one sibling's living in the house, and they're going to keep the house and that kind of thing. So gift of equities that I've ever dealt with.
Mm-hmm. It could be that. It's also really common to see grandparents. We see it more so up here in North Carolina, where you've got generations have owned these large tracts of land, and they are subdividing their land and giving a child or grandchild a couple of acres to build a home. And that is considered a gift of equity. Gifts of equity, depending on the amount, can have tax implications. So that's always something that you want to have a client refer to a tax professional to find out how that's going to impact from a tax standpoint. A couple other possible sources of income, or not income, down payment, grants. So it could be like local bonds, could be grants, down payment, kind of under the category of down payment assistance programs. It also could be a lender credit. If somebody just needs a little bit more money to help cover the closing cost or those prepaids, you could get a lender credit where they're paying a little higher interest rate. I mean, interest rates are higher right now anyhow, but they can pay a little higher interest rate and get a lender credit. I've done this a number of times for some first-time home buyers that they were able to roll that additional cost into their monthly payment. They could absorb that okay. They were just short some funds. So lender credits are a great way to put a little extra cash in buyers' hands. Bridge loans are something that are coming back for people that currently own a property and just need some funds for that next home, knowing that they're going to be able to sell the existing property. So bridge loans are something that are coming back. We do have a broker source for bridge loans. And real quick, wrap this up on cash. So cash, we kind of touched on it before. So if you've got cash in an account, cash is going to show up. One, you could just see these little cash deposits. And depending on the amount of money, it's something called large deposits. So we're looking at every single deposit. Are those deposits coming from an employer or are they not coming from an employer? If they're in each particular type of loan determines, or loan type and the loan amount determines what is considered a large deposit. So a large deposit could be cash. It may not be cash, but we have to source those funds. So if you've got just little bits of cash coming in, somebody reimburses you $20 and you put that in your account, that cash is not a big deal. If they put in, if you put in $2,000 and you can't show that the paper trail where that money came from, that cash cannot be used. Mattress money. How are you going to document the mattress money? I had one not too long ago where the folks had sold a property. They had the net proceeds. We had all the documentation. We had the closing disclosure. We had the wire transfer from the closing attorney from the sale of that property, perfectly acceptable sources of their down payment. And then we're looking at the flow of the money in and out of their bank statements. And we've got to have 2 months bank statements so if somebody goes under contract today, puts in an application today, I've got to have 2 months, the last 2 months of your bank statements. Well, we start looking at these people's bank statements. We see the money coming in from the sale of their house, but then we see $10,000 going out, 4 different transactions. And then all of a sudden we see, we might see a $15,000 transaction coming back in here. And then it's a $12,000 transaction. And then a $17,000 transaction and the money coming back in. It was this really weird flow of money. Turns out they wanted to see what $40,000 looked like sitting on their dining room table. The proceeds that they received from the sale of their home now has become non-sourceable, essentially mattress money, and large cash deposits coming back into their account. We can no longer track it or source it. That did not close.
What if somebody has, like Bobby has, big old rooms full of gold? Do you have to sell the gold in order to borrow against it?
And it's going to be like, you can't show up at the close. And I actually had this like knocking heads kind of conversation with my stepdad. And he's like, well, cash is a perfectly acceptable source of currency. I don't understand why you can't use cash, why you can't just show up with cash at a closing table. You can't source it. And it really comes down to anti-money laundering. And so many of the laws that we see today, the regulations and guidelines that we see today, are because of the monstrous legislation called the Dodd-Frank Act that came out of the 2008 crash. And all the money laundering and the anti-terrorism, part of it rolls into the Patriot Act that prevents all of this. And so if you've got bars of gold sitting in your house, or if you've got coins, it's going to fall into these other assets that, you're going to need to liquidate them. You got to show the ownership, and you've got to be able to liquidate them and show that flow of the money. This is where you sold them. This is where it got deposited into your checking account, and it just has to be documented.
I had a closing in the early 2000s, and about 16 people walked into the room. This man and wife, husband and wife, were buying this property. It was like a $70,000 property, and at the end of it, like 16 people come walking in the room, and they literally started emptying coat pockets and things and put mounds of cash on the table. And the closing attorney had to get like 4 people, and they had to put it on. They put every bit of it with serial numbers could be seen, and they copied on the copier. I was like, man, it looks like we're really literally printing money in here now. They color copied it, every one of those dollar bills, 10s, 50s, whatever they had, and literally had the lady document every serial number from every bill.
Yep.
And that's how they closed on that house. It was crazy amount of money.
I've had 2 closing attorneys there in the Atlanta area tell very similar stories where people walked into the closing with literally a suitcase of cash. My start in real estate was back in the mid-90s and worked for John Wheeland Homes. And even one of our clients there, I actually remember exactly who he was. I was not at the closing. He was this young, very, very cocky doctor. And he was one of the ones that walked in with a suitcase full of cash for his down payment.
It used to work. Can't do it.
Used to work. Can't do that today. And getting back to having the conversation with clients, and this is something just working with a good lender, we're going to have this conversation initially. Like one of my real estate clients, one of the more interesting real estate clients I'd had a referral come to me, and this guy was working at a local car dealership, killing it, making 6-figure income. He hadn't been there real long, but just killing it. So one, we couldn't use his income because it was all commission. You got to wait 2 years before you've got all commission income. Had a lot of money to put down. So he thought, I'm making bank now, got lots of money to put down. It's going to be no problem to buy a house. Wrong. We're like, where's the lender that I always use goes, where's your money coming from? Oh, I've got it in a safe in my house. Now, one, where'd that money come from to start with? He literally had hundreds of thousands of dollars. He had been an exotic dancer at one of the strip clubs there in Atlanta.
Nothing wrong with that. Nothing wrong with
it. And so none of it was reported. And it's essentially in his closet in a safe. And it took 2 years of just small deposits in his checking account to get that money seasoned in order for him to be able to buy, long enough on his job that we could use his income. But, just because somebody's got really great income or they've actually got some funds doesn't mean we can always use them. It's about asking deeper questions and being able to document it. And how is it being used in the transaction? Does this help?
It helps, definitely. I think this is good info. Anybody have any questions?
No, but I do remember that little guy. You and I were working together then.
Yeah.
I had a lady call me one time and tell me that she had a unique situation and that she had all this cash to buy a house. And I was like, unique situation? Like you getting a divorce or something? And she was like, so you're in the middle of one or bankruptcy or something? That's what I was expecting. And she had like $150,000 in cash at her house or her mama's house or somewhere because she was a stripper. And I was like, well, that is unique, I guess. I mean, anyway, she didn't buy a house.
Yeah, I can tell you all kinds of interesting stories.
I saw a post yesterday. The realtor had asked for proof of funds, and the guy brought in $100,000 in cash and laid it on the table.
He's got proof. There it is.
Yeah,
that's crazy. Hey, we're gonna get we're gonna do a Zoom show. Not Strategy Real Estate Partners, but it's going to be something different, and it'll be branded. And it's going to be everybody that's in real estate's invited to it. It's not going to be locked down like these different calls are. And it's going to be about stories like that, like unique individual stories of maybe a home inspector, getting attacked by a raccoon or, something like that. It's going to be funny, mysterious, unbelievable, inconceivable kind of stories. And there's millions of them out there. You can't talk to a real estate agent, or 3 or 4 of them without, a couple of good stories coming out. And that's going to be, I'll record it. And I think that's going to be really good and entertaining for everybody. We'll do like in 30-minute increments or something and let everybody come in on it and then build a kind of a tribe around it. So I'm looking for names for that right now. So if anybody comes up with any good blistery mystery kind of names that, work together, rhyme a little bit, send them to me because I got to figure that out because I want to start that by the middle of the summer probably.
Oh, I've got one for y'all. It's like, you can't make this and do the little, the little asterisk, exclamation point, whatever, fill in the blank. You can't make this blank up.
That's the name of that's what you think the name of it?
Yep, that'd be the name of it. Because people won't believe the things that real estate agents see.
Yeah. I think it would be great. It'll be lenders. It'll be, roofers if they want to be involved with it. Everybody has a story, right? It's not just everything that we do. Pretty much now is locked down to real estate agents, but this is not got to be. It could be across the board. Lenders. There's all kinds of crazy stories that lenders tell. So anyway, I definitely.
Closing attorneys.
What's that?
closing attorneys. I mean, everybody.
Yeah, I got some good closing stories too. Anyway, yeah, it'll be good. I'd love to hear somebody. Then I might take it and make a book out of it or something. Take people's stories, get permission, and then make it into a book or something. Entertainment. Anyway, it'd be a good podcast thing. All right. Well, I appreciate it, Paige. Thank you for the info. And guys, think of other things that she might be able to help us with. We, something that I haven't been. You might be able to answer this right now. I don't know what the rates are, and I don't know what somebody the other day was trying to do a 203K loan, a rehab loan on basically almost a tear down house. I mean, people are so that loan is for like a new HVAC system or some floors, appliances. It's not for rehabbing a tear down. Anyway, people, what are the rates and stuff right now?
High fives, possibly low sixes.
Oh, it's definitely
depends on the type of loan, depends on the person's credit, depends on their employment type. You could have somebody of equal credit doing essentially the same loan, but one borrower is self-employed and the other one's salaried. They're going to pay different rates.
You mentioned credit. You mentioned credit a while ago. Do you have the breakdown of how the formula for credit actually works? Like a visual?
I do have something from my credit restoration company that I refer folks to that is really good. And credit is that is one of those mysteries that so many people just don't have much information on and think, I have people that call me and go, oh, I've got a 620 credit score. Can I get a loan? And I've had other people that have had credit, they've got a credit score that meets the minimum requirement, but they got so much other junk in their credit history that is preventing them from getting a loan. That was one of my real estate clients. I actually helped them find 2 rentals because they couldn't buy. 7-figure income earners actually had decent credit scores, had loads of money to put down. They were referred to me by their financial planner. Could not buy a house to save their life because they had junk in their credit history.
It's amazing that we use the word credit on a daily basis, most of us, yet we don't really understand how credit is put. Most of us don't understand how credit is put together. Like, how is it packaged and how do they come up with the score, right?
I tell you what, everybody send me I don't have everybody's email address. If everybody will, let me put my information in here. If everybody will shoot me an email. My credit restoration company just sent me last week. They have got a book called What Every Parent Needs to Teach Their Kids About Credit. And it is not, it's really not a book written for kids. It's written for adults. And it is fantastic. It's a really simple, easy read in layman's terms. And it spells all that out. And it also teaches people how to maximize their credit scores.
Good.
Paige, that might be a good contact to have come in one morning. I know your particular guy doesn't do Georgia, but still the information would probably be relevant. And since he's so used to being out in front of the public, and then he could connect us with whoever is in Georgia.
Yeah, I'm going to reach out to him and just see. I've got my Georgia contact. I'll see if she would be willing to come on. All right, I'll just put my information in chat.
When we get off of here, I'll send you the everybody's personal email addresses because I keep it separate. So I've got a sheet of everybody. There's like 43. All of those people don't get invited to this, so they may not know, but you can still send them something and say if you're interested in this book or whatever. That might help them. But I'll send you that when we get off of here.
All right, good. And Bobby, I got your email, so I'll send that to you.
I think that'll be a great conversation. How is credit done and anything? I mean, that's a deep one. It changes for everybody almost. And credit repair.
Credit repair. We could get a credit repair expert to come on here and join us. But one of the calls that I was listening to just before getting on this call really has to do with financial literacy, and so many people lack financial literacy in today's world. And just even understanding how money works and understanding compound interest and everything compounds, not just interest. Compounding, it's like a compound effect by a book Darren Hardy wrote. It can be compounding effect of your efforts and daily habits. But just people understanding how money works, how credit works, how everything ties together. And I think it's a really important conversation that I really get into with clients. Budgeting, how to save money, what to pay off, really not even just credit repair. Like I have folks that go, oh, well, I think I need to boost my credit. No, you don't need to boost your credit. Your credit is just fine. I can tell you, I've talked to so many people that while they couldn't find a house, they're like, oh, I thought I'd just go pay off all my credit cards to boost my credit so I could get a little higher interest rate or a little lower interest rate. Well, they spent all of the money that they were going to use for their down payment, paying off all of the credit cards, lowered their credit score, and now you got a lower credit score and no money to go buy a house. So these are all conversations I try to have with people on the front end. Sometimes they listen, sometimes they don't. Kind of like your kids.
My little boy walks around here every day saying, I got so many responsibilities. I'm like, really?
He's how old?
He'll be 3 in 2 months. He's like, I got so many responsibilities. I'm like, really? Did you just say that? Cracks me up.
Oh,
just proves he's listening.
Yeah, he's listening big time. He's having conversations with the dogs, the animals, everything, sitting in there talking real estate. Anyway. All right. Well, thank you guys. Call me if you need me. I'm going to hang out for a minute for anybody's got a question for me. And we will shut this thing down. Thank you, Paige.
All right. Y'all have a great week. Let me know if I can help you out at all.
I'll be sharing insightful and informative videos on stress-free retirement, being your own bank, setting up college funds, understanding Social Security, wills, probate, trust, and how the Fed Reserve rate hikes affect your mortgage rates. And always real estate solutions. I'm your go-to expert in real property. Look for my YouTube channel, living in Canton, Georgia, where it is sunny as can be right now. If you find value here, please like and share so others might as well. Remember, I'm not a videographer, not a video editor. I just want to share the most important info with you guys. Each video has a full version of around half hour or so, but there are multiple shorts of only 5 minutes or less as well. My name, Daniel Klopfelter. My area of specialty is real estate and asset protection for more than 25 years. So why am I exhorting you to view financial-based videos on a real estate channel? Good question. I believe that we all do better when we know better, which is why I'm here to expose you to a team of experts who know the topics that matter most. All of these topics work in unison. Full disclosure, I receive nothing for doing these videos other than the satisfaction of adding value to you. So smash that like button already. What are you waiting for? Share this so other people can see it. Y'all have a great day.